Hi everyone, I hope you're really good, and I'm so sorry for the change of the link. You normally saw another link to join the webinar, so all you normally received a new link on LinkedIn, on YouTube, and on your email inbox to join on the webinar in the other link. So sorry again for the description. So today webinar, as you may know, the LGO Revolution for Africa young people is a webinar we created in January last year. The main goal of this webinar is to support entrepreneurships, entrepreneur and also young people in Africa scale on what they're doing, rather than association, NGO, or entrepreneurs. So we're providing them with tools, resources, and experts that can highlighting and show them many different advices on their journey to learn from and to be successful. So today webinar will be more focused on entrepreneurship journey and more focused on the way to support your seed funding, or the way to connect you with a venture capital that can help you raise money. As you may know, in Africa now, many young people creating their own entrepreneurship journey and their own entrepreneurship dream, and they want to be the new CEO of something. But most of them, after 1 year or 2 years, they have lack of support, lack of financing mostly, and they die. So this webinar will be a main focus on venture capital, and we give you advice from different experts from different area and different country. They will share with you many advice and helping you very to understanding the ecosystem of venture capital and how you guys can learn from them and have the opportunity to maybe on your side also being like Jumia, as you may see. For this year, Patrick say that Africa has raised more than $6.5 billion on for the last year, sorry. And I think it's very interesting to see this as an opportunity for you to grow and to scale up. So today we have many other experts with us, so I'm gonna let them join and presenting themselves. And so quickly, you guys can introduce yourself and say what you're doing, who you are, and where you come from, and what the main topic you're gonna focus on this webinar today. So whatever, we're gonna start with our wonderful, amazing women, so Norah and Jessica, and then Usman, you can go ahead.
Hi, good afternoon, everyone. My name is Noorah Alhussein, and I am an entrepreneurship and innovation enabler at an economic governmental enabler in Saudi Arabia, and it's called Munshaat. And today we're gonna, navigate through the ecosystem and how can you leverage it to be able to reach your potential growth. And thank you, Omar, for arranging this and for including me in it.
Thank you so much, Norah. Jessica, can go ahead.
Thank you. Hi, Omar. Hi, everyone. It's a pleasure for me to be here today. My name is Jessica Naga. I am Mauritian, so I'm talking to you from beautiful Mauritius. I am a fintech lawyer. I've been a fintech lawyer for 19 years now, and recently been appointed as the CEO of MINDEX Group, headquartered in Mauritius. What we are is a regulated digital ecosystem to create, store, and trade virtual assets of any kind. Personally, my journey has been, so I'm one of the co-founders of this group. I spent about 4 years in Africa before returning to Mauritius after having studied and worked and lived in London for quite a number of years. And what I saw in Africa was a lot of infrastructure deficiency, financial infrastructure deficiency. So very high cost of payments, very difficult to capital raise. The exchanges have very little liquidity, even for the bigger assets. Now imagine the new startups, the fintech companies, and at the same time, there was a proliferation of fintech companies because there was a need to be addressed. So Mindex comes in trying to do things differently, piggybacking on blockchain and tokenization of real world assets to try to address this. So really excited to talk today because I think it is really core to what we do, trying to assist with fundraising.
Thank you so much, Sika, and wonderful. Thank you, Jeremy, for just joining. So you can go with Usman, and then we'll head to Jeremy.
Thank you very much, Umar, for inviting me, and really pleased to meet all the other panelists. I'm Usman Iftikhar. I'm the co-founder and CEO of Catalysr, which is a startup incubator based out of Australia. It's been running for the last 7 years. And I sort of co-founded it because I wanted to solve a problem for myself, which was when I migrated to Australia about 10 years ago from Pakistan, there wasn't a lot of support available to support migrants and refugees into starting their own businesses. And so I wanted to be the one to do it because I wanted to solve my own problem, but then also see that problem solved for others. And so over the last 7 years, we have supported over 800 founders from 87 different countries to start their own businesses, both in tech, but also in social enterprise. And I worked in sort of startups, consulting, government, grants, and sort of various different impact investment work. I've recently joined as a venture partner in a new fund as well, particularly focused on supporting immigrant entrepreneurs. So really excited to be a part of this conversation and also bring in that lens of investing in immigrant entrepreneurs, particularly in Africa, because I know Africa is a fantastic place where, you know, there's so many people that are migrating from one place to another, and that will only increase with the challenges we're facing with conflict, with climate change, etc. So how can, you know, immigrants both, you know, look at opportunities in different countries, but also how can host countries where immigrants are going to look at immigrants differently and ways of supporting them? So really excited to be a part of this conversation.
Wonderful, wonderful. Happy to having you on board. And for those who don't know, me and Usman come from the Obama Leader programs. So wonderful to continuously connecting each other and work together on building the world we want. So yeah. So Jeremy, you can go on your side. Thank you.
Great to meet you guys. For me, a little bit of an intro. I am on a mission to impact 3 billion people. Very ambitious. So I am a COO and general partner at Montelier Capital. And what I see with a lot of other investors in the world is it's as much as people will chase money, it's actually hard for us to give out money because we're looking for the quality, high scale founders. So I've been at $1 million and $1 billion companies. I've managed teams of people. I wrote artificial intelligence on a project with the FBI and Secret Service. There are perspectives that it takes a long time to get. And so I want to share those. And so I release lots of daily videos on LinkedIn. And I want to share that information at scale, which is why I create the videos, which is why I get on calls like this, to share that information at scale so that we can get more quality founders in the world, so that we can actually drive impact in the world. Because right now, quality founders are the impact to bottlenecking world impact at scale. So
thank you. Wonderful. Wow, it's a lot of people actually. It's more than the population of Africa. So yeah. Actually, it's really ambitious. And you know, when we created the AGO webinar, the goal was to reach 5 million person in Africa actually. So it's less than the 3 billion. So yeah, we are working on it's amazing goal, and see that people have a vision of impacting all the world, and that's mainly connection we have together today from the east, west, and north of the world, and it's very amazing. So we're gonna just jump on the session, and we're gonna start with Jessica. So I think Jessica will share with us an amazing view of her work, and also the ecosystem in Mauritius, how it's going on, and how I think Mauritius is one of the country you should go to invest right now if you want to create a startup. When you pop up, I think for the last couple of years, the World Bank has ranked Mauritius as one of the major private sector country in Africa and sometimes the world. So I think leaning from your side and mainly from all other your experience you can share with us, I think we're gonna lean every much. And thank you for joining us, and I'm gonna let you the floor. So we don't hear you, Jessica. I don't know if you're muted or not.
I am muted. I apologize. Can you hear me now? Hello? Can you hear me?
Yes, we can hear you. We can hear you.
Okay. All right. So I thought I would talk to you today about something we call Capture Raise 2.0. tokenizing our way into financing businesses. So I'm just going to tell you a little bit about Mauritius and why MINDEX chose to be headquartered in Mauritius. So while the world is deciding whether, maybe say it differently, how to regulate virtual assets, so crypto assets, Mauritius has taken the stand in 2021, December 2021, to regulate crypto assets. So that is a really good thing, I think, now, because it brings a lot of certainty in the market. We are operating at a time where the US is not even defining what a digital asset is, and the SEC is sanctioning exchanges left, right, center. And that is a huge problem, because it's not the exchanges only that are getting penalized, the founders, but it's very much the people using it. And in Africa, Chainalysis comes out and says that what we are seeing is an increase of 1,200% roughly year on year of crypto adoption in Africa, whether it is tokenized asset, but mostly cryptocurrency that is addressing a need for cheaper payment in Africa. So what I would like to talk to you about is tokenization of assets, going very general to start with, and then showing you what MINDEX is doing in Mauritius. So what is tokenization of asset? I think Omar has gone too far, so there's a slide before this one. So what is tokenization of asset? So tokenization of asset is simplistically digitalization of an asset. So it could be digitalization of a certificate that shows where the asset is custodied, or it can be tokenization of a share. That is a bit more simple, because in traditional securities exchange already, we have a DMAT system. So the shares don't exist in physical form anymore. They're in digital form. Here, the difference is they are digitalized and put on the blockchain. So why the blockchain? Because it's easier, cheaper, faster when it's stored on the blockchain to see it, to move it, and it's immutable, So all these advantages of blockchain, you can use it to store real world assets so that you can fractionalize it and you can move it faster. So what are the advantages of tokenization? So can I have the next slide, please? So few advantages, but very, very important. So it creates unique and immutable tokens. There is ease of access. There is reduction of administrative inefficiencies and settlement delays. So here you can automate with smart contracts, etc., the token. So you can put corporate events in the token, so you can reduce administrative inefficiencies. There is cost effectiveness, so you can reduce intermediaries. So if you look at the traditional exchanges, they have to operate through brokers. So if you add so let's say you're based in Mauritius, you're trying to buy something in Kenya. So it's complicated, right? You have to go through brokers, you have foreign currency changes, you have time zone differences. And therefore, all of the exchanges in Africa, the securities one, operate in silo. They're not connected to each other. The thinking is, why can't you bring the advantages of a crypto exchange of 24/7 trading with a regulation of a securities exchange together, so that you can do both of them with the highest security, but also managing to sell real world assets as opposed to cryptos only. And then you can track the movements of the token a lot more, because everything is on chain and you can track it. So it makes audit a lot easier, amongst other things. So next slide, please. So syndication of investors. So through fractional ownership of assets. So let's take a work of art, which a Picasso, very difficult for the majority of the world to access investment into such assets. But with fractionalization, I think we're going to see a democratization of investment. So the ability for people to invest into all kinds of assets. So I again talk about administrative efficiency. So you can embed into their AML CFT, on automated onboarding, automated KYC, using all the new technology. So geolocation tracking, liveness checks, so you can do biometric checks. So all of these just to make the whole world an easier place to trade real world asset and securities. So the other advantage of tokens, which we mustn't forget, is that it allows people to be really creative. So instead of listing a whole company, you can list bits of it. You can list, and you can add perks to a token that usually would have maybe no real value to a company. So that's why we saw fund tokens working really well, because you could embed in there, for example, the ability for the fans to choose what color costume the players would wear. So you could bring really other benefits, advantages that have maybe low intrinsic value, but which would engage the community that uses the product to invest in it more easily. And then we can unlock value from traditionally idle or illiquid assets. For example, you have IP, intellectual property in a company. It is difficult to raise finance just on that when you don't want to get other investors into your whole company. So now you can value this, you can tokenize it, you can fractionalize it, you can allow people to invest just in that. And then digital assets are programmable, and that is just where we're going to go. Less administrative stuff, more automation. Now you can use AI to add other advantages to this. You can pull to data scrap to just really get the right information to make those tokens work for us. And finally, you go into tokenization, and it's just innovation. So at the moment, tokenization is very much a hype. And you have the big players going into it. So you have Citi that issued a report on it a couple of weeks ago, and now the traditional players are looking at tokenization of assets, and they're kind of saying this is what's going to stay after the hype of crypto and everything is not here. I think everything serves a purpose, and I think as long as it's useful and it's done well and people are protected, a lot of these assets could survive. So now, Capital Raise 2.0, I touched on it earlier when I was looking at the advantages, but, imagine a company investing into the whole thing. The creators of it can be really excited about the project, but the investors then do not know how this is going to be run, how this is going to be received, whether the product is going to work, and it becomes very difficult to seek finance, especially for innovative products, fintech ones, because you don't know how it's going to go. Now, by being able to split the assets, tokenize them, fractionalize them, list them, it becomes so much more easy to raise finance for different types of businesses. So you can go after an asset, as a bank would do, as a collateral, instead of going after the whole company to raise finance. So it just adds possibilities. So you could raise finance from a contract that a company has. And I think the example of the MBA player that tokenized these contracts of 5 years to raise finance on it is an example. So if anyone's interested, you can go and look at that. Sorry, I don't remember the NBA player's name. It was a big star, but it's an example of something very practical that was done and shows us the possibilities that we can use tokenization for. So let's look at some practical use cases of tokenization and what's worked and been done already. So we've seen the world's first NFT super yacht that was sold for $12 million in March 2022. So this was done as one asset and sold. I mean, the advantage of tokenizing an asset like this is that in the metadata, you could actually include information about the asset that you could use afterwards. So it makes the asset, the NFT, really the whole asset, all the information, all of the documentation that you would need to trade that asset after. So it makes due diligence a lot easier cross-border. So if you have an asset like this with all the documents around it, verified and listed on an exchange that is regulated and follows, all the rules of KYC and checks, then you have a very easy possible trade in the future instead of using, lawyers in all jurisdiction. I mean, I'm a lawyer. I know it reduces work for lawyers, but I think a lot of efficiency can be brought through this. Another one is an example of a villa in France that was tokenized. A villa, Anna Villa, valued at 6.5 million euros, that was tokenized as a security and sold. So you can see at the bottom, it says it was broken down in 100,000 units, and each had a value of 6.5 euros. So again, democratization of investment, the ability to invest in those assets that otherwise would not be possible. That's another one. That's a fractional ownership of, this was a ship finance platform, and it had an initial raise of 200 million to purchase a cargo vessels. And it just shows you the possibilities, just all kinds of assets. Next one, please. So this one, again, tokenization of luxury hotel in London for $600 million. That, again, was a security token. So you've seen a couple of examples of what's being done. So let's dive into the MINDEX solution itself. So this is the MINDEX Group, headquartered in Mauritius, because Mauritius at the moment regulates everything. So if you are a security, so a bond, a share, this is a security token, it's regulated as a security. So an IPO becomes an STO, security token offering. If you are trading the asset itself, not the company or the bond or the debt, so bond, you can tokenize the property itself. So you have a property, you tokenize it, you fractionalize it, you list it as what Mauritius calls an ITO, an initial token offering, then you can trade that. And that is also regulated. So what does that tell us? So, you know, the ICO came about to go around the laws of securities. And, you know, we had some success stories, but we had a lot of scams, a lot of things that didn't work in the ICO world. Here, Mauritius is saying nothing can be unregulated. Everything has to be regulated. So whether it's an STO, whether it's what they call an ITO, you fall into one of them and you're fully regulated. MINDEX also has a clearing depository license, so it can custody securities, tokenize it, custody it, and it can also allow escrow settlement. So when you're operating in the virtual world, you have a lot of atomic swaps, so you can exchange assets against each other very efficiently. But here, if you were to do margin trading or you needed to have a listing with a floor, so a minimum amount you want to raise, the clearing could keep the money in custody and then release when the floor is met. The last one is the digital custodian. From our research, it appears that MINDEX Digital Custodian is the first custodian in Africa, and it very much wants to assist in the storing in a regulated way, where we know whose wallet it is, and you know we provide the regulated option for the African continent in terms of crypto and virtual assets, so tokenized assets of any kind. Next one. So this is how the ecosystem operates, you know. So your due diligence, you go in and then you connect your wallet and you can trade. And then you need to off-ramp, you can go into the bank. So MINDEX is connected to banks, so we can on-ramp, off-ramp, allow you into the ecosystem to trade. So once you're within, it almost feels like it's a peer-to-peer trading. You can exchange with each other any asset. And that's what we wanted to create, the largest possible marketplace, so that there would be free trade between it of participants that have been DD'd and we know who they are. So there can be institutional investors, there can be brokers, but it can also be retail. So it is possible disintermediation. It's high security, it's high transparency, because we know what assets are in there. And we as an exchange follow the asset from beginning to end and give regular independent updates to our investors. 24/7 trading, totally cross-border. In the big crypto exchange, no one asks, where is that exchange living, you know, where is it from? And it's the same thing here. It doesn't have to be belonging anywhere. It's under the purview and the regulation of a country and a regulator, but otherwise it should be accessible to everyone. And that's what we wanted to create. Streamlined onboarding, streamlined purchase is definitely there. High compliance. So we want to apply the highest standard in the world that we can to provide the highest security for the investors, the issuers, the market players, pretty much everyone, including the jurisdiction. Instant settlement, atomic swap, seamless swap, and easy opt-out. So you can come in and out, fiat into crypto, and crypto into fiat as you need. Next one, please. So this is what I would say. Mauritius has chosen to go the very highly regulated way on everything that is crypto assets. And I think personally, it's a very good decision. In the African countries, Mauritius is one where the population really respects the institutions and the authorities. It's a very stable country, politically, financially, really well situated. It's got, trusted regulators, laws, legal system. It also has tried and tested traditional financial system and regulated players from all over the world. Mauritius is the highest FDI into India for sure, and I think very big one into Africa as well. With this really innovative laws that they've brought, an ecosystem that they've brought in, it makes creating those ITOs, those STOs, so much easier. Mauritius is bilingual. Mauritians are really bilingual. So it allows us to service both the East Africa and the West Africa market, the English-speaking and the French-speaking Africa. And I really think that with this pioneering regulation, which is called the Virtual Asset Act in Mauritius that came about in February last year, it'll give a lot of comfort to investors from all around the world to come here and bring that liquidity. And as we do crypto in a regulated fashion as well, we will allow the crypto community to not need to change back into fiat before accessing real world assets. We could just have really seamless swaps. And it brings the best to everyone with the highest efficiency. And hopefully with this, we achieve our highest goal, which is to bring more liquidity to large scale, small scale startup projects in Africa. So this is the little bit of what I wanted to say, and I'm happy to take questions.
Wonderful, very interesting. I've quite two questions on my side before jumping on the question. I think some people ask some question in the chat, and we also received some question. But I have a quick question on my side. From the perspective of an early stage startup, actually, let's say growing from Johannesburg or Kenya or Rwanda, whatever. How or what do I need to know about the regulation to benefit all those kind of methodology to raising funds, the tokenization? I mean, if I'm an early stage startup and I'm from every country in Africa, actually, either there is a need of main regulation my country should done before I'll be able to be part of it, or whatever it says, I will benefit it from Mauritius. How it's working legally? I mean, that's my first question. Yeah.
So if I understand correctly, what you're saying is whether you're based elsewhere than Mauritius and you can benefit from the Mauritius system. But you see, when you go and list on the London Stock Exchange or on Nasdaq, you can come from anywhere and you can list there, and then people can come and buy there, because they trust it. And it's the same thing here. So currently in Mauritius, we're listing people from all over the world, and including the US, including the UK. I mean, I've been a barrister in the UK for, 10 years, and then came back into the region. So I work with a lot of international jurisdictions. So Isle of Man, but the UK, Dubai, everyone is looking very much at virtual asset. And the thing at the moment is that a lot of them have not put regulation yet. I mean, if you look at Dubai, the VARA very recently issued the rules, and they haven't granted any licenses yet. And the UK is at the moment asking people to register, but they haven't really issued laws on it. So you're clearly, what's happening. In the US, for example, the SEC is refusing to define what a digital asset is, but it's sanctioning people post-event. So it doesn't bring a lot of certainty. So actually, at the moment, Mauritius is doing really well in terms of giving that kind of certainty. And it's ahead of the curve. It's not the only country, obviously, you know, but it has brought in a very clear framework. And I think the additional thing is Mauritius forms part of one of the 6 countries in the world that complies with all of FATF recommendations, all 40. So it's really showing you that it's going the highly transparent, regulated way, and that it's not scared of virtual asset. So it's really being careful about the players that they're regulating that act almost like the soldiers to make sure that, you know, they do this while protecting people, investors, and the jurisdiction.
Wonderful. Okay. Just go through this this specification, and I'm thinking about how it's costly actually, because, you know, when you want to create, I'll just give an example. I remember last year we were trying to create a business company in Mauritius, and to creating it was cost me $10,000 actually, to just creating having a legal company in Mauritius. And how is this? Do I need to have a legal creating company in Mauritius, or it's gonna work either just having my bank accounts outside Mauritius? How it's connected with Mauritius, and how much it's gonna cost me to do that?
So I think it depends what you're looking for, right? So setting up a company is something else. So here we're talking listing to be able to capital raise, right? So you can be based anywhere in the world and you can list on a stock exchange, you know. So MINDEX is a stock exchange. It is also a marketplace, so you could list also just your tokens as opposed to the company itself, the security. So you could do both. But I think the cost is commensurate with the business size, what you're doing, what you're trying to achieve. So, you know, we've listed, so initial cost could be anything, 2,500, we've listed, you know, employee share schemes, to listing really big companies for, you know, 15,000 initial and then a fee going on. But if you look at a listing on the London Stock Exchange, for example, you can look at £500,000. And that is why the listings are for the bigger companies, you know, not the smaller ones. What the digital exchanges bring is a reduced cost so that the market can be accessed by more people.
Okay, I have two questions. I'm going to put one question on the chat, and then I think you can go on your side on LinkedIn, and also then, of course, or someone on your team, if it's possible, so they will have an answer of the question, because there is many questions in the chat, but I'm going to just put this one. If you can read it and answer
it. So basically what we're talking about here is MINDEX is a financial services, very strong legal company that uses tech to automate and facilitate, and it uses blockchain because it's easier. The asset is on chain and you can see it. You know, people say, you know, you can do a lot of this, you know, more easily. I think the question was, you know, why is it different? There is a very, very small secondary market of trade in Africa. Very, very little, almost none. You know, people go and list in securities exchanges in Africa, and no one asks, how are those securities exchanges working in terms of technology? Because they're established securities exchange. What we're doing is using technology to facilitate. So what that means is SecDex was set up in the Seychelles before MINDEX came about, right? And when SecDex was set up 5 years ago, 4 or 5 years ago, technology was a lot less developed than it is now. So we will move and keep using the best technology, and it is moving and it's getting better and better. And I think that way we can keep using whatever works best. And this is not about the hype. This is about addressing a real need to tokenize assets, to make them available to more people. And it is to fill a need. It is not to just use blockchain because it's exciting or anything. I think there is a need to create exchanges that make it easier for the wider population to be able to invest in. And that will allow assets that traditionally can't raise to raise, because you would be able to invest in a company that you use, an SME that you use. Instead of, just investing for investing, you can invest in assets that you will use. And then the people investing in them would have more of an interest in the success of that company than just to make money, because there are non-financial gains as well of investing into the shop that is down the road. When COVID came and we saw it, it is the SMEs in the...
Wow, okay. It was rushed. Okay, but I think she's back. Jessica, if you can hear me, I think if you have a last word to say to a participant, what word will be, or if not, we are. So we're gonna thank you so much. Do you hear me? Do you still hear me or not? Okay, I think you have trouble connection. So we're gonna going forwards with our next panelists. Thank you so much, Jessica. I think this is very, very interesting view of things, and I think with the FTFCA in Africa, actually, thinking about the big market of 1.5 billion person in Africa, actually trying to do trade, and I think cryptocurrency can be definitely a solution of raising fund and also to access to financing that we naturally not have access to it. And I encourage all person in this webinar to go through, contact directly Jessica on LinkedIn or on MINDEX Group. I think they will answer all your questions. I will tell them to come on the chat and also to try to answer the question you put on the chat. So now we're traveling to Saudi Arabia. I think we are in the amazing country in the world, actually, between Mauritius and now traveling to Saudi Arabia. And I think Norah, you are very experienced on supporting growing entrepreneur building ecosystem on your side. So I would love really to hear from your experiences and
Definitely.
Do you still hear me? So I would really love to hear from your experiences and also the way you work on building ecosystem in your country, and also how we can learn from that to support entrepreneurs from Africa and also helping them having access to opportunity, having access to find investor, having access to financing. So go ahead.
Sure. I'm just not seeing my presentation. I might. Okay, perfect. Let me just see if I can scroll through the presentation. Will I be needing you to change it, Amr, for me, every slide?
Actually, you can do it yourself, but if you want me to assist, that's fine.
Oh, maybe it takes time. Okay.
Yeah.
Okay. So I believe we've already done this bit. So hi, everyone. I'm Norah, and I'm here to share my knowledge and experience and how can you understand and utilize your understanding of the entrepreneurial ecosystem around you to be able to achieve the growth you need. And I'm going to give some examples from the Saudi ecosystem. I believe emerging economies have lots of similarities. So hopefully this would be quite beneficial. So a bit of a brief from my experience. I've done my bachelor's in business administration accounting at King Saud University, which is the first established university in Saudi Arabia. I've done my master's degree in entrepreneurship and innovation from King's London University. And I've worked in consultancy in KPMG and Ernst & Young. I've also worked in banking and finance in HSBC Saudi, and I am currently an entrepreneurship and innovation advancement lead in Munshaat, which is a government economic enabler in Saudi Arabia. I'm just struggling a bit with the back and forth, so bear with me, everyone. First of all, we have a quote here by Albert Einstein, says that if the bees disappeared off the face of the earth, man would only have 4 years left to live. And this is not meant to scare everyone. It's merely to highlight the importance of one player in an ecosystem and the impact that, if something goes wrong with one, how it can impact the whole. And moving to the next slide. So what is an entrepreneurial ecosystem? An entrepreneurial ecosystem is similarly to a natural ecosystem, where, elements coming together would create value and, complement one another. An entrepreneurial ecosystem is a blend of economical, political, and cultural ecosystems. And this is the definition by Spiegel, which is the one we're going to explore today, because I believe it categorizes the elements nicely into material attributes, cultural and social ones. And I'll explain a bit about them. So it will kind of make the case study we're going to look at afterwards more clear. So for the material attributes, it's mostly formal institutions, being universities, governments issuing policies, also the infrastructure such as roads and internet cables and whatnot. And for the cultural and social ones, they're mostly informal institutions, which are the cultures and the behaviors that will guide society and individuals. Just moving to the next one. Okay, so the entrepreneurial ecosystem, the output of that is entrepreneurial activity, and the entrepreneurial activity has roughly three main key, let's say, elements. First is the creation of innovative startups. Secondly is supporting the high growth firms, and lastly is the entrepreneurial employee activity, which is employees implementing innovative ideas within their firms. So I'll kind of give you a bit of how this is happening in the Saudi ecosystem. So for the innovative startups, the policies and governance, which is a part of the material attributes, SAMA, which is the central bank, part of the policies and governance in Saudi Arabia, has created a sandbox to be able to, assess and assist the fintech startups in Saudi Arabia. And if everything goes well and their solutions fits a certain criteria, they'll be able to get licensing. And this sandbox done by the central bank enables innovation in fintech, as well as making sure that the market is stable and it does not impact, the whole economy. As for the high growth firms, which is the second box, this is supported by the rise of angel investing and VCs, high appetite, driven by the history of entrepreneurship, since we are having a couple of success stories, and this again impacts how the investment capital element, would kind of feed back to it. So they all interconnect together. As for the entrepreneurial employee activity, we are currently working on introducing the co-creation methods to firms to be able to make them have more engagement of their employees to be able to achieve corporate innovation. So all of this, the elements and the outputs will ultimately, have the outcome of the regional economic development. And this will help whether, the ecosystem can be a city, can be a country, can be a region, depending on how you look at it and how you assess it. So actually, looking at the elements and, knowing what is the impact and the outcome of it, we are going to look at the entrepreneurial growth stages. And, looking at that will be able to help us, locate how the elements can support you in achieving growth, whether you want to be able to, talk to governmental bodies, you want to be able to secure financing, you should, understand. I think someone is, oh, okay, never mind. It's, there's no worries. I thought someone wrote that they cannot hear me, but hopefully the voice is quite clear. Okay, so the growth stages is guided by the axis of investment and return. So usually the innovative startups will begin with some investment with low return, and this is considered the explore stage. And then, after securing the investment and being able to explore the market further, develop the solution to have a better market fit solution, this will, move to the expand phase. And with the expand phase, if the company is very comfortable in what they do, they will be able to reach the exploitation stage, and they will achieve, high return, and they wouldn't need, as much investment because they're in control of their finances. And the fourth stage is the restrain stage, which is the control, where the startup will, that might have low returns, and they'll need to be able to control their operations better. And it is worth highlighting that, not all firms go through all these stages. It obviously differs based on industry and on the ecosystem itself. And now we're going to look at how do you, utilize the elements in your growth stage. Just trying to click, bear with me. Okay, so we are going to look at a case study from Saudi Arabia and how, the ecosystem elements supported its growth. And hopefully, looking at this case study will help you be able to kind of identify which element fits where for your stage. And, by understanding that, you'll be able to refine your pitch deck or your conversations with investors and be able to, secure the financing that you need. So for this Saudi company, it's a telemedicine company. So the founder, created his solution while he was in university, and the university endorsed his solution, supported him. So at the explore stage, we'll say that the university element contributed highly to his growth. However, the ecosystem is quite complex. So, sometimes you'll be supported by one, but then there's a pushback from another. In his case, the supportive culture, which is his family, and also, the potential customers were not quite keen on taking like medical consultation online. They wanted to go and meet the person in front of them, get the consultation face to face, because this is a solution. The telemedicine is something new. They're not comfortable with it. So the supportive culture was, maybe not in his favor. However, so the founder tried to seek some mentors in the field to try and, better, refine his solution. And with that, being connected with mentors, he was able to understand that there is a shift in the policies and governance in the telemedicine field. And it was also empowered by the need of telemedicine. It was during COVID. So the policies kind of became, let's say, looser a little, and they wanted the solution faster. So he was closer from the industry, so he was able to kind of capitalize on that. With the need and with the industry knowledge that he has now, he was able to secure investments and be able to, develop his solution further. And also, now people are more comfortable with, telemedicine because they didn't have much choice. They couldn't go to see a doctor. So they needed to kind of use telemedicine. And this goes to the exploit stage because so now there is need, the markets are reacting to his solution. And then there's also the infrastructure so people were more skeptical, now they need it. And the infrastructure there was kind of serving the solution because we have like very good internet infrastructure. Hopefully my connection is good, so it will support my claim. But so people rely on online services due to the internet infrastructure being good here, so they're more comfortable. However, there is lots of traffic, so there's a pushback from this element. However, the pushback kind of, although roads are maybe not as, for other companies, is as needed, example, logistics, but for this solution, the traffic and the roads not being as, maybe open as other industries would benefit from. For this solution, it was great because people don't want to go out on the road. The traffic is, horrendous, but they now have the online service, so they can use the telemedicine. And that element served him in this particular growth stage. And then, having an online solution, you need some tech engineers probably, and the work talent was, it's quite expensive. Probably this is like a global kind of thing. The tech talents they tend to be more costly because it's a competitive field. Everyone wants digital solutions. So with that, the founder is kind of reaching to the control stage a little. But then again, you can try and, reassess to be able to move into the stage that you want and be able to benefit from the element that you believe will add value to you, or try and, wiggle through the one that is not beneficial for you. And last thing is, a river cuts through rock, not because of its power, but because of its persistent. So I would encourage you to really look around you, see what are the elements and how your ecosystem is. Try and be able to, use it for your advantage, and try and find ways around the ones that are not advantageous to you. And try and also, because this is, it should help you master your seed funding and the VC as well, showing whoever you're talking to be able to seek investment, that you understand the things around you and you know how to interact with them, is going to be a huge plus. So with that understanding and with your persistence, hopefully you'll be able to reach whatever you need. And thank you so much. If there are any questions or any points you would like us to kind of touch back on again.
Thank you so much. As always, we told you that we already received some couple of questions from all of panelists before starting the webinar. So I have one or two questions on my side, and then I will ask you one question from another person who already sent it. The first question: what kind of tips or let's say advice you will give for an entrepreneur actually in Africa to put on their journey in order to reach all the ecosystem opportunity they have? Let's say 3 or 5 advice you can give them.
So the first thing is, being on this webinar is a great way, because you are able to understand, who's around you in the area. And also, if there's, a face-to-face networking session in your region or the area you want to, expand in, whether it's a country or it's a region, try to be engaged, try to understand more, and see how it can, help your solution. Definitely knowing people is always a good thing to help you grow, because we're social beings. We always will need and benefit from one another. So I'd say engage to understand, to be able to know how to grow as you need.
Okay, thanks so much for that. The second question is, actually, we see that Saudi Arabia is growing fast with startups supporting all over the world. Do you have some kind of organization or opportunity that work with Africa startup in the other side, that connect Africa and Saudi Arabia, or what doing Moonshot can offer as opportunity also for entrepreneurs in Africa?
Okay, so we do have a couple of programs for either to help the local companies in Saudi to expand in other regions, and vice versa for whoever wants to come to the region. There are some initiatives to support that. And this file is led by the Ministry of Investment in Saudi Arabia, and the program is called Invest Saudi. And you can just log in their website and see what are the availabilities of the programs, or maybe they'll have some reports, because there are like some focused industries, for example. And if you are a person who offer this a solution in that industry, then you might find some great things to be able to utilize.
Okay. Last question is not for me, for one person in Kenya. Is she actually in an incubator of textile in Kenya actually? And she put this question: I'm from Kenya and I want to have been connected with investor in Saudi Arabia, and I want to create my business in Saudi Arabia. Do you know what step I should put to go achieve on that goal? I mean, creating a company in Saudi Arabia as a Kenyan citizen living in Kenya and not living in Saudi Arabia, and also having the opportunity of being involved with all the ecosystem and the opportunity in your country.
Okay, so if I understand the question correctly, it's someone who wants to offer a service, but the head office is somewhere else. Yes.
Yeah, and she's an early stage, because there is a difference between being you say invest in Saudi Arabia. Investor, it's mean we call investor. Investors, people who have money, so they don't need money, at least they just come to invest. It's different with someone who actually come to take the opportunity and took the money back and come from Africa. So it's two different things. And from the stage when you are in early stages, actually one of the lake we have in some of the ecosystem in Africa. So our ecosystem don't support you to grow. So some people see that it's maybe good to go out and to base your company in another country rather than being on your side, because you, as Jessica said, for example, Mauritius is actually good because they are all the requirements of NFT requirement investment are in Mauritius, but not in Comoros, but not in other countries. So yeah, from someone who is in Africa, from she's question, she's in Kenya, but for someone who's in Africa and are on the stage of early staging and not have a lot of money, because I know if you come invest in Saudi Arabia, they're gonna ask you to have a liability on money, and how is it possible, and if it's so, what step she can make for.
Yeah, so the brand is called Invest Saudi. However, there's a track for entrepreneurs, and it does not require that you have any capital. But there are certain requirements in the sense of, you need to be, you have potential high scalability, and, a couple of, I guess, requirements. Another way of being able to come and is to join. So I believe in this case, she is in an incubator already, but one of the things that whoever is interested in the Saudi market is for them to join an international, an incubator that accepts international startups. So we'll have, a couple of incubators or accelerators here in Saudi Arabia. And if you join these, they'll probably help you navigate through some of like the legal things and how you can set up and whatnot. They will be able to be there for you, probably for like a share of investment, and for a share of your company, and they see the feasibility in your solution, because this is why would they would want to have you in, is that they see some feasibility in the solution that you're offering. However, if you are in somewhere else and you want to have a business in Saudi, especially if it's something like in commerce and you can have it online, there are some cloud offices. I don't have names on me, but there are offices where you'll pay a subscription and you'll have in Saudi or in anywhere you want to have your business there.
Wonderful. Thanks so much again for your time. And I think for my side, I think this is very helping. And I know very well how this part of Asia, part of the world, actually growing very fast on entrepreneurship and startup ecosystem. And it's very interesting to see the way it's going on, and also to see the opportunity to connect us from Africa, because, as I say, we have the knowledge, we have the asset, we have all the need, but what needed is the requirement of the ecosystem to supporting us. So when you have this ecosystem, so it's easier for you to grow and to scale up and to go through the next level of for entrepreneur journey. So thank you so much again. For now, we're gonna jump up on Usman. I think you're still with us. So hello, bro. I hope you're fine. So I'm gonna just let you get the floor because you are you are like your home. So yeah, just go ahead.
Thank you so much for having me, Umar, and really great to be here. I don't have any slides, so I'll just go through, I guess, some key points that I wanted to mention. Before I sort of jump into seed funding and VC kind of information, I wanted to start by saying that this information that I'm going to talk about is sort of very general in nature and really is not financial advice. So obviously it's not specific to your startup or your kind of country and your region. So please do understand the regulations and sort of opportunities that exist in your region and get that advice locally to see what works best in your specific case. But I'll sort of talk to you about generally about VC and raising capital. So with that kind of disclaimer out of the way, I guess I wanted to sort of specifically talk about the work that I've been doing with Catalysr and supporting migrant entrepreneurs. Really has led me to this point of supporting them with investments as well. And particularly something that I wanted to start with, because I know that there is a lot of migration within Africa, but also generally globally, and we've got a global audience joining today. So some of you might be interested in learning a bit more about migrant entrepreneurs and why migrant entrepreneurs make great entrepreneurs to begin with. So as an immigrant myself, or as a migrant myself, I know this firsthand, but I've also seen it in many other people that immigrants have great resilience, ambition, adaptability, great work ethic, have a global perspective, and I really have that kind of entrepreneurial mindset. And the most important thing is that when you migrate, so that act of migration itself, it shows that you've got the willingness to take risk, to stand out, to take initiative. So really, that's why migrant entrepreneurs oftentimes are, also great at entrepreneurship, because of some of the things that come with migrating also are things and the traits that help you become a good entrepreneur as well. And specifically, I think a key thing to note is that migrant entrepreneurs oftentimes, don't fall prey to existing status quo bias, or are able to better spot opportunities because they're starting from scratch, they're in a new country, in a new environment. And so we've got the data to sort of show why migrant entrepreneurs do well and how they do well globally, but still they're underfunded. So when you look at some of the data from the US, for example, 12% of the sort of population in the United States is a first generation immigrant, and they get about 20% of the VC funding in the US, but still over 55% of unicorn companies, these are over $1 billion kind of companies, have at least one immigrant founder. So some of the obvious ones, is like SpaceX and Tesla and WhatsApp, Google, Stripe. I'll keep going. It will take me all day. Similar thing with the UK, where there's like 14% of their I guess population is first generation immigrants, with 17% of them being startup founders and not having as much kind of support from VC. However, 64% of the unicorns in the UK have at least one immigrant founder as well. So that kind of tells you, this is the same message. Some of the ones that you would know would be like Deliveroo, or TransferWise is another one, who are now called Wise. And talking about Australia locally here, we found the same kind of data. So we've got a lot of migration happening in Australia. So we've got over 28% of Australian population is born overseas, so over 1/4, which is quite huge. And what we found was that over 36% of those are actually startup founders, which is really fantastic. And another sort of great, I guess, stat is that over 60% of unicorns in Australia also have an immigrant background, so like a first generation or second generation immigrant. So you can think of like Atlassian, CultureAmp, Canva, GoVun are some of the big Australian kind of unicorn companies. And again, I can sort of keep listing. There's many. So the reason I wanted to mention this is because although migrant entrepreneurs do really well when it comes to creating fantastic global companies and unicorns, they're still underfunded. So this is an opportunity for those of you who are either investors looking to invest to think about migrant entrepreneurs and supporting them, because they can provide you with those outsized returns you're looking for. But also for migrant entrepreneurs themselves, this is a great opportunity for you as well to be able to think about how you can leverage your skills and your expertise to build unique startups or unique kind of opportunities in whatever country you're based in. So that's kind of a bit of a preamble about migrant entrepreneurs and why you should think about that. But then I know the topic today is really focused on sort of VCs and particularly seed funding. And so I guess before we jump into VCs specifically, and particularly, like what VCs are looking for from founders, it's really important to understand how VCs work. So I know sort of fellow panelists have talked about, like the kind of new models of funding with tokenization. They've also talked about ecosystems and entrepreneurship in Saudi Arabia. So like what I can talk about a bit more is around the VC side of things. And for those of you who've been familiar with VCs, it might seem like a very simplistic definition, but it's a good way to understand and have, I guess, a sort of basic understanding of what venture capital is. So in simple terms, venture capitalists are investors who are mostly investing money on other people's behalf. So they would set up a fund, raise some capital, ask rich people or institutions, organizations who call limited partners to give them money to invest on their behalf. And because startups are such risky bets when it comes to sort of financial investments, VCs really have this mindset that they want outsized returns, and they approach this with something called portfolio theory. So what it is that when a VC invests in a portfolio of different startups, they do it with a mindset that they want each of those startups to be able to return the full fund. So what that means is that that impacts you if you're a startup founder, if you're looking to raise capital from a particular venture capital fund. And oftentimes when startups are going out and raising capital, they're not thinking about that aspect. So specifically, if you're thinking about VC fund size, that's really important. So I'll give you an example of what that means in practical terms. If, for example, a VC fund is really early stage, a small one, say they've got $10 million, and they are investing $100,000 in your early stage startup, right? What that means is, say they take 10% of the equity, to be able to return, them $10 million, you need to be able to create a company that basically is, about 10 times that size, so that you add that 10% equity, they're still able to get that return. So you need to have at least a 100 million company, right? And again, I'm doing really basic VC maths there, but every portfolio company that $10 million fund will invest in should need to at least return $100 million, if not more. When you think about a 500 million fund or a bigger fund, they might be giving you a 100K check, but what they're expecting from you is $500 million return or even more, right? So why is that important? That's important because if you're a founder who's not looking for that explosive, big global growth, or you're not targeting a huge, large market, global market, then you might not be the right fit for VC funding. And what that means is that you might be wasting your time, but also the venture capitalist's time as well. So there are other ways in which you can also raise capital. So whether that's bootstrapping, raising capital from grants, crowdfunding, pre-sales, making the revenue, the old kind of good way of making cash, but also even debt. And then there's new ways of debt as well. So you've got traditional funding, but as well as venture debt as well, and tokenization and other things that, our sort of fellow panelists was talking about from Mauritius. So really think about, number one, whether you are creating a large global company, or at least you've got that ambition. You might not know exactly how to get there, but as a founder, you need to know that. And the funds that you're approaching, are they investing in the kind of technologies and the industries that you're kind of wanting to, build a startup in, but also what the fund size looks like and what that means for you as a startup in terms of growth and sort of future as well. So those things are really important for you to consider. And oftentimes startup founders are not really aware of that, so they don't look at it. There's a really fantastic book that I highly recommend many startup founders to go and read. It is called Venture Deals by Brad Feld. Really fantastic book. It helps you understand the basics of VC and sort of, raising seed funding. So with that kind of, I guess, motivation of VCs out of the way, I guess it's important to understand, if you are a startup founder, if you're going out there and you're trying to raise capital for venture capitalists, what is it that they're looking for, right? So assuming that you're going after a large global market, what's next? Well, the first thing is they're looking for a world-class team. And a world-class team is a team that has both the skills, but also is uniquely positioned to solve a particular problem or address a particular gap in the market. Now, every VC will say that, but then they will define what world-class means differently. So for us, that means, focusing on really diversity, focusing on having the right kind of skill sets, that you've got the domain knowledge and expertise. So say you want to do a startup in advanced manufacturing or energy or clean tech, knowing that industry and being involved in industry really helps. Have you been involved in another startup as an employee? Have you been, part of another company in that industry? So all those kind of things really help give you brownie points and help you with creating that world-class team. And so if you're a solo founder, that's fine. You can go and sort of find other people who can work with you to build a startup. So you're more likely to raise funding if you are, in a team. The second thing that VC are looking for is solving a problem with a large market opportunity. So this is kind of echoing off of what I was saying earlier. Because of the way VC maths work, they want you to focus on big global problems with opportunity for big sort of outsized global returns. And so if you're solving a unique problem that's very unique to your country or unique to your city, sometimes that might not be enough. Again, depends on what kind of city and country you're in. But oftentimes, you need to think global. You need to think big from day one. So if you're not doing that, then that's another thing to keep in mind, that VCs might not be the right funding for you. The third thing that they're looking for is a term you might have heard called traction. And traction, really what it means is that it could either be customer growth or it could be revenue growth. There's sort of two ways in which you can demonstrate traction. So customer growth is, depending on what kind of product you're building or what kind of startup you have, you would be able to, I guess, show some intent and some interest from early stage customers. You might not have built the final product, but are customers actually wanting your product? What kind of market pool do you actually have from those customers? Do they really desperately want it? Are you actually solving a need? And how many customers have you been able to sort of convince in the early days? What is the sort of size of those customers? So is it like a smaller B2C or a direct-to-consumer customer, or is it like a B2B customer? What is the lead time to getting that customer? So that kind of customer growth is really important. And the second thing is revenue growth. Now, you might not have revenue right now, or you might have a little bit of revenue, especially if you're an early stage startup. But it's really important to know that VCs are often looking for growth rates more than the sort of like revenue itself right now. And then what they want to see is that your growth rate is increasing. So if you're making a bit of revenue now, they want to see that you are making more revenue and increasing that rate over time. And so you're getting more and more revenue, and that rate is getting better. So if you've got that, then you can demonstrate traction. Again, there are a lot of really great resources on traction and how to achieve it. One fantastic book that I really like is called Traction by Gabriel Weinberg, and you can go and have a look. He also has a couple of blog pieces on Medium. One is about, I think, 19 or 21 channels on getting traction. You can go and have a look. And he's got a fantastic framework called a bullseye framework, which you can also go and have a look. So that's the third thing. And then the fourth thing is a strong competitive advantage. So I guess the question is, like, how are you going to stay sustainable, and how are you going to make sure that you can, ward off competition? So this could be your team. You might have a world-class team that is, impossible to kind of replicate, although sometimes that's really hard. So in other cases, it could be unique intellectual property. So you might have built something, particularly in manufacturing or in hardware, where you can actually patent that, or you can try and protect that intellectual property and make it hard to copy. It could be a unique data set, which you can help you to be ahead of the game, and hard to copy, or at least will take people some time to get over it. So whatever that unique thing is, you need to know. If it's very easy to copy or imitate, then again the question is like, what's stopping people from doing it? And so that's another thing to keep in mind. Again, there are exceptions to all these rules, but ultimately, if you're going after a VC, these are the kind of things you should be mindful of. So the next thing that I'm going to jump on is around the practical strategies on how you as an entrepreneur, whether you're a migrant entrepreneur or generally as an entrepreneur, can sort of, what can you do to prepare your business for raising capital, particularly from venture capital? And so I guess the first thing to start with is, don't start with funding, start with a problem. So find a problem that's worth solving. You should validate it with your potential customers and users. And again, there are amazing resources out there if you're an early stage founder to go and check out. One of them is called Talking to Humans. It's by Gift Constable. It's my favorite book. Another one called Disciplined Entrepreneurship by Bill Olet from MIT. There's another fantastic book called Lean Startup by Eric Ries. And there's like loads and loads of resources, right? So when you're thinking about kind of how do you figure out what problem to solve, how do you sort of validate it, these are some resources that you can go and have a look at. So that's step number one. Step two is putting a fantastic co-founding team together and agreeing how you will work together. Many of the startups fail because either they don't have a good team, or their team just doesn't know how to work together and sort of falls apart. So this is, there's a lot of art here versus science, but really finding co-founders and people that that you trust, that have the kind of right skill sets is easier said than done. So really, this is something you spend time on and sort of curate that fantastic team. Because if you can't do that, then that really will help you go a long way, particularly raising capital in the early days and sort of executing. Then the next step for you is, if you can, bootstrap, and by bootstrap I mean either put a bit of your own money or raise some capital from angel investors or other kind of friends and family to try and develop a prototype or a proof of concept for your solution, whatever that might be. And obviously this would differ depending on the industry. If you're building software, it might be easier. If you're building hardware, you might need a lot more money. So it depends on kind of where you are and what your industry is. But if you can, it's highly recommended to try and build like a proof of concept or a prototype using some money that you can gather from different places before you go and raise capital, because that will help you sort of test that idea out before you actually make more for the progress. The next thing is getting some early customers to use that product or use that prototype and to demonstrate that it actually works. It does what it says it's going to do. It doesn't mean that it will necessarily have all the things figured out. It might have a lot of things that might not work, but having the basics that are working, oftentimes we call it MVP or a minimum viable product. So building that is really important. Then you should think about the business model behind your startup. There's so many startups that get started but don't really have a business model. So this is something that I will highly recommend, is think about what is the business model. So how are you going to actually make money? How will you make sure that you'll make more money versus lose money? Because yes, you can lose a bit of money in the beginning, but you need to ultimately have a business model to sustain and grow. And then have a go-to-market strategy. So how are you actually going to reach those customers? How will you grow? It's really important. And again, that traction book is a good way for you to sort of help think about that. And essentially, the next step for you is then creating a vision for the future that you want to build, and really create that exciting future, and create a roadmap on how you can get there. Right now, oftentimes people think, why should we make this plan? Why should we make this roadmap? It doesn't, the world's going to change. Things might not exactly go the way we planned it. And I would say I agree, but having that planning process is really important. So everything might not go exactly to plan and what you want to do, but at least having a plan means you're testing your assumptions. You have a bit of a North Star or a map to follow, and you might change direction, and you definitely will change direction, but at least it means that you know where your North Star is, where you're going, what kind of a future you're looking forward to. The next one is basically thinking about after you've built your vision, after you've done all this kind of stuff, one of the really important things as a startup founder, and again, many startup founders don't do this really well, is learn how to tell good stories and craft a fantastic pitch, right? And a pitch is not a pitch deck. It's not what you can put on slides and then share. It's really about how you can tell a story, how you can tell a narrative of the future that you're trying to build, how you can get people excited, whether that's your employees or future employees, whether that's your partners, whether that's your customers, whether that's your investors. You need to be able to tell a really good story and learn how to actually pitch well. So do spend some time and invest some time in doing that. And so once you do all those things, then you're kind of ready to raise capital and grow. So it might seem like the first thing oftentimes entrepreneurs think is we will go and raise capital, but that's sort of starting the wrong way. You should do all the other things first. And then once you do that, you will be kind of what we call investor ready. And investors will actually want to invest in you because you're already sort of hitting the marks. The other thing to note is, and this is sometimes a misconception that some founders have, is they might say, we'll build this product, we'll build our business, and then we'll go in and engage with venture capitalists. And then, basically they'll give us money. That very rarely happens. So a term that we VCs in the VC world use is called that investors invest in lines and not dots. And so what we mean by that is that investors want to look at you, speak to you, and see your progress and growth over time. So whether that's customer growth, your growth as a team, your idea, how it's sort of changing and developing, how you're working together, how you're dealing with problems, and so on, and what your resilience looks like. And so highly recommend engaging with venture capitalists really early. So when you've identified a problem or pulled a team together, that will be a good time to start talking to them. You can tell them you're not raising capital right now, but you just want to keep them up to date, and then keep them updated on your growth throughout the process until you're ready to raise, right? And if you do it in the right way, then you'll be surprised. There'll be more people who want to invest in you than you would actually have time for. So there's I think some of the other people have said in the panel as well, there's a lot of smart money out there, but you just need to be able to do the right things first before you can get to that point where you can actually raise capital. And if you just want to start raising capital firsthand, it might not work, and then you might think, well, fundraising is really hard for startups. It is, but you also need to be able to start in doing the right things, focusing on the problem, building the right product with your customer, getting that intent and that kind of customer relationship done before you jump into actually raising capital. So hopefully that's useful. And then I know that we might have some VCs joining us as well, or other investors. So I'll sort of come back to that migrant entrepreneurship topic and say that, based on the data that I've sort of shared before, you should look at migrant entrepreneurs and sort of helping them, because they're a huge untapped potential. And then if you want to connect with different migrant entrepreneurship kind of organizations globally, I'm very happy to help and connect. So that's my time. Thank you so much for having me, Umar. Hopefully that's helpful. And if anyone has questions, happy to answer.
Yeah, definitely. It was very, very mastering the principal key of preparing ourselves. I will call it the to-do list for doing and raising money and save out to capital, especially the traction sides. I think it's the most important thing that entrepreneurs actually losing themselves on trying to prepare a pitch deck, trying to go doing networking, trying to go doing marketing and communication. And we forget the most important thing, which is working on our products and having traction. And I think this is very, very important, that through highlighting those steps and this element that we have to be ready before going. It's like when you go to play a football game, it's not make sense. You have to have shoes, you have to have time, and specifically to be ready to go. And because it's a fight, actually there is more than 10 or 100 million entrepreneurs in the world. So raising fund, it's a challenging, being one of the 1% of the million percent we are actually in the world. So thanks so much. I have two questions actually. One is not for me, but it's for someone who see your profile and you put the question. She's from Nigeria, and she said, I want to come in. Any opportunity offer for someone who not living in being an entrepreneur, and how Catalysr maybe help me go in Australia, implement myself, and stay there on doing my own businesses. This is the first question. I'm going to do to the second one, and then I'm going to let you go through it. And the second one is from Asa. What's the most important on your side? I think you have been supporting an entrepreneur. So if you say 5 mistakes the entrepreneur always made before doing on seed funding, on venture capital, what will be the most important mistake that entrepreneurs should be avoid on their journey?
Great questions, both of them. So I'll answer the first one first, which is for if you're an entrepreneur who wants to migrate to Australia and start a business there, what can you do? So there are many different ways in which you can sort of move to Australia on different types of visas. There are also specific global talent visas, as well as visas for entrepreneurship as well. So I'm not a migration agent, but we've got some partners, organizations who are really good at sort of doing this stuff, and they can give you some fantastic advice. So if that's you, if you're looking to learn a bit more about it, you can get in touch and we can help. And the programs we run, some of those programs, particularly our early stage pre-accelerator and fellowship, are online. So it doesn't matter where you're based in the world, you can participate in them as well. So if you're interested, again, hit me up on LinkedIn. I'm very happy to have a chat with you one-on-one and see how we can help and support you. And the second question, I think, was around, what are the 5 things to avoid if you are looking to raise capital, and some of the mistakes that I've seen founders make. So first thing that I already mentioned was, not focusing on the problem, but actually starting to get excited about a particular tech or a solution. So many entrepreneurs, including myself, I'm an engineer by training, do this, where we get really excited about technology, really excited about a solution, and forget about the problem, forget about the customer. To really start from that problem, really start from the customer. That's something that I've seen people make this mistake over and over again. They will make an exciting new app, an exciting new kind of, a gizmo or something, technology, and then they realize, no, there's no customer, no one wants to buy it, no one wants to use it. So I don't want you to waste your money and fall into that trap. You will not only waste your own money, but you also won't be able to raise any other capital as well. So definitely focus on the problem first. That will be the first thing and first mistake to avoid. The second thing is taking too long in planning and not taking enough action. And this is an area where, oftentimes people who are not entrepreneurs or are starting with, like a corporate background or a more academic background sometimes fall into this trap where they might be analyzing things too much and they might be slow to take action. Entrepreneurship, the whole name of the game is taking action, because the most you will learn is through action. So if you're a founder, get in there, get started, do something today. Even if you take a small action, that's something that's really important. The third thing I'll say is not asking for help. Many entrepreneurs in the early days specifically are afraid of, that someone's going to steal their idea and will do it. And if your idea is that easy to implement, that anyone on the street can take it and do it, then maybe you shouldn't be focusing on that idea in the first place. So don't keep your idea to the chest. Actually share it with other people and get help and advice, because you want to, people can really help you. And what you'll find is there are many people who are really helpful and can help out. So unless you've got created a completely new technology or something that you want to patent or whatever, that's a sort of unique case. But in most other kind of circumstances, it's better to share your idea, better to get feedback, better to get help. And so many founders I've seen not often ask for help, because that's something that is hard. Fourth thing, and this is something that I've I guess sort of personally faced, and an issue that I know many founders face as well, is not prioritizing your own mental health and well-being. Again, being a founder is hard. There's a lot of long days and hours. It's sort of midnight here at the moment in Australia. So I can tell you that, we work really hard, but we also need to relax. We also need to recharge. And it's really important that you take the time to focus on your own well-being, take time off when you can, build those healthy habits, whether it's exercise, eating, all that kind of stuff. Again, I'm not saying that I do it all the time. I try to do it every now and then. So whatever you can do, that's really important, because a mistake that I made in the early days was just going really hard, 7 days a week, working, long days, and then I burnt out. So what I would highly recommend you to do is to also take care of your personal mental health and well-being. And then the final bit is sort of seeking feedback, right? So seeking feedback means talking to a whole bunch of people, and this is, whether that's your customers, investors, other team members, it could be your idea that you're building. But again, asking for help is one thing, but also seeking feedback is really important, because what you want to be able to do is learn. So the key thing that sets startups apart from a big company is that you've got quick feedback loops and quick learning loops, because you want to learn what's working and do more of that, and learn what's not working and do less of that. So if you're going to take those things away, those would be my key tips.
Thanks so much again, Smile. Very helpful. And I just want to mention it, but after the webinar, we're doing a ebook on all your advice, all your things. So our team will read, we will write all you say on an ebook, and will help other to not on the webinar to read all your advice. So very helpful. And don't hesitate to contact them directly, of course. So now we're gonna jump up on the guy who want to achieve the ambition and amazing goal to impact 3 billion person in the world. I think Jeremy, do you hear me?
Can you hear me?
Yeah, I hear you loudly. I hear you. I don't hear you very well. Do you hear me? I think you have a lack of connection. I don't know. Yeah, I can hear you, but not very well. Do you hear me? Do you hear me on the side?
I can hear you.
Okay, so you can just go ahead, I think, because I don't hear well. Maybe you can speak, and then it's gonna be worth it. So go ahead.
Okay. I want everybody. I want to make sure that everybody hears well. We need a great founder. A lot of people will come in and pitch.
I don't know if it's me or Jeremy. We don't really hear you very well. Yeah, I think we can't hear you. We can't hear you very well. I think you think there is a problem of connection. Yeah, maybe you can skip. You want to skip? You can, maybe you can change your phone, or I don't know. Maybe you can change the network you're using. I don't know. I don't know what's happening. Otherwise, from you guys are with us, don't. I think you're very enjoying this webinar, and as mentioned before, after the webinar, you will receiving all our incubator partners and participants will receiving an ebook from the webinar. And again, a very thanks so much for all of you being part of this amazing opportunity and amazing program. For now, we are achieving an amazing goal to 3,000 person participating in the LGO events, and very kind, very kind of you being always with us. So Jeremy, you back. I hope you're gonna hear right now. I don't know. Do you hear me? Okay. That's very weird though, because this is the shift of the world. You are in ES, you have a trouble of connection. And do you hear? I think it's okay right now. I think it's okay because I see you smiling, facing, moving. So maybe you can speak.
Can you hear me pretty good?
Yeah, wonderful. So I'm gonna let you go.
Okay, cool. Hopefully this will stay in. Hopefully this will stay in. Am I really that far zoomed in? All right. So a lot of people will come in and pitch, and it's 5-10 minutes long. And what we want to do is we want to get shorter pitches. And so we're talking about mastering the art of seed funding, right? So at the core of a company is the founder. The founder is going to attract investors, partners, customers, and employees. And to do that, to attract and retain talent at scale, we have to look at the ability for a human being to listen to another human being. It sounds very fundamental. A lot of people on here today are talking about really, really great things, whether you want to talk about unit economics, you want to talk about a CAC to LTV ratio of 1 to 3, you want to talk about different regions in the world. What's the same across all industries is the human. When I'm listening to somebody pitch me, I'm looking for how that human is communicating, because how they communicate with me and listen to me and listen to feedback from me is how they're going to communicate with partners, employees, other investors. When somebody cuts me off by half a second, I don't need the attention, but what it shows me is they're not going to listen, they're not going to learn, they're not going to grow, right? At the base of a company is the founder's ability to attract and become a gravity ball of the rest of the team, right? So in the activity section of my LinkedIn, I have a video, 10-minute video about becoming a gravity ball, because this is important. Because at scale, your hard engineering skills, if you have engineering skills, if you have sales skills, those aren't going to matter when you have 5 employees, 500 employees, 1,000 employees. Your skills are going to be dwarfed. Your product is also going to mutate over time. Your product is going to mutate. Your product lineup is going to change. You're going to add more products over time. You're going to respond to customers. You're going to respond to the market overall. You're going to respond to employees and your own iteration feedback. So if a VC investor like me was going to make any rigorous decision, it wouldn't be based on the product. And yet, most pitches to me and to other investors are all about the product. And what actually matters is the human. So you becoming a better, more high quality, well-rounded human is the most important part of the investment thesis that I'm looking at, that any investor is really going to be looking at, right? Also, getting rejected by a VC doesn't mean anything about your startup except for that it's not a large, high-scale company. The VCs, like me, looking for a 10x or a 100x scale. So there's 3 tiers of business that I'll break them up into. One is a functional business that is making you money. The second is maybe for angel investment where you can get a 2 or 3x. And then there's VC that is 10x or 100x. So just because you get rejected by VC does not mean your business is not good. It just means it's not high scale 10x to 100x scale. So, and VC happens to get a lot of news and press because they're big companies. But there's a lot of businesses that we really, really want funded in the world that just are not funded by VC, because VC is, like Usman talked about, funded by LPs, limited partners, other rich people in the world, where they simply want a high return on capital. And so VCs are providing a high return on capital. It is not a vetting of your company. So to create a great company, what we want to do, especially for first-time founders, is identify how you can get to a fast revenue runway. So there are people that pitch me on health products, on maybe even starting a whole car, right? Don't start with a product that is a lot of different features. A 1,500 car part Tesla, don't start with something like that. Don't start with something as complicated as health of a human body. Start with something like lemonade. Don't actually start with lemonade, but the idea is water and mix at a high level, right? Start with low feature count in your products, because low feature count means a shorter product development timeline, which means you can get to revenue in 30 days, 60 days, 90 days. If you have knowledge in something and you can go consult over Zoom, you can do one-on-one coaching before building a software app, before building a marketplace. That is something that can get you up and running in 30 to 60 days to revenue. In the beginning stages, ideally, if you can run a company without investment, that's better, because then you're not giving up your cap table of equity. So for you to choose a small product to start with, if this is your first-time founder, if you're a first-time founder and this is your first company, we want you to start with a small product. Choose 2 or 3 features. If you want to go rebuild Starbucks, don't go building a mocha cookie crumble frappuccino. Start with coffee and water. Sell that for $1 or $2. Then make profit on that and use the profit to generate you more revenue runway to then build in the next feature, add sugar, add cookies, etc. Right? Same thing for any company. Every company is going to start from the founder, and then you want to start with a small product, and then you want to slowly build up that product size, and then you want to slowly build up the product lineup. Starting off with 10 products all at once, a lot of people come in and they say, I want to do this, this, this. That's okay for a founder to be ambitious. I'm ambitious. We want people to be ambitious. But instead of doing them all in parallel, all these 10 or 20 products in parallel, or even 5 in parallel, do them in a certain order. Choose the most profitable one first, because that's going to give you a revenue runway to finance your second one, your third one faster. So choosing the order of your product release is really, really important. So we start with the founder, then we go to a small product, then we increase the product size, then we increase the product lineup. And as we're doing that, we're going to be scaling and hiring for our employees. So when you're doing a pitch, right, mastering the art of seed funding, when you're doing a pitch, we want you to have that traction. We want you to have started to make sales, but you're not going to make sales if you don't learn to communicate well and briefly. So when you're pitching an investor, how brief you can be is how brief you're going to be when you're writing the copywriting at the top of funnel. And I know I am jumping around with terminologies. We have probably a wide variety of audience. Some people maybe have never started a company before. Some people could be in 10 or 20 million, right? And I've operated and I do founder mentoring at all the levels. So I'm jumping around on words here. But when you're brief with your communication and when you're clear, that's what's going to apply in when you're writing copywriting for your product. You need it to be those 8 to 10 words on any social media, wherever your billboard is, wherever you're doing traffic capture. In a standard 3-step funnel, you have traffic capture, which is going to be your social media or some other traffic capture area. It could be TV advertising, billboards. You have your traffic capture. It needs to be a short hook. And then it goes to step 2, which is the landing page, which could be a web page landing page or any other, or in the store as a landing page. And then your step 3 is your checkout. Step 4 in a non-standard, but also very common, is your upsell, right? And you can make all kinds of flows, but your standard is your 3-step funnel. And so if you're not clear and brief at your top of funnel, as it's called, some people will be familiar with the term, some people will not. If you're not clear and brief at your top of funnel, you're not going to pull anyone in to your entire company. You could be the best founder with the best problem, with the best product, with the best team. But if you don't have clear, concise communication at the top of funnel, you're not going to pull people down funnel from seeing your advertisement to going to your landing page to buying your product or your service, right? So when somebody's pitching me and they pitch for a minute, 2 minutes, 3 minutes, and they can't briefly say, what do I do in 5 seconds, right? I do founder mentoring. That's the answer. 3 seconds. I do founder mentoring. If somebody wants to dive in deeper, then we can talk about the diving in. But you want your pitch to be 7 seconds, and then let the investor or somebody ask a question, and then you answer another short 5 to 7 second answer, and then another one, right? If we're talking about Google, I did a video on this the other day, so you can see it on LinkedIn if you want the more detailed version, because I'm going high level here. But if you're Google, what do? We're a search engine that gathers all the information from the web, and you can access it via a simple search bar. What is Apple doing? Luxury technology products, computer, smartphone, Apple Watch. Again, for massive billion-sized companies, you have simple answers. So you want to be able to answer a simple answer. And what that shows is you have listening ability with somebody. You have the ability to be brief. And this 5 to 7 second bite is also what's important. people from a different education background, income background, culture, race, personality, country. Talk to a lot of different people in general, having conversations, be able to communicate and relate to people, because that is your ability to attract and retain talent. That is the most important part of running a company, is your ability to attract and retain talent, not how smart you are. As a founder, we want you to be the dumbest person in the room. I'm a founder and a VC investor. I want to be, as a founder, when I put on my founder hat, I want to be the dumbest person in the room and hire people smarter than me. So when I'm hiring people that are doing something that I don't know how to do, say it's making a car, say it's cooking a meal, say it's building software, right? I want to then look for in them their attention to detail, because that transcends industry, that transcends sales, that transcends engineering, that transcends research, right? I want to see their attention to detail. I want to see their communication quality. I want to see their empathy. I want to see their compassion. I want to see their teamwork. These are the things that I'm going to be vetting for, and these are very rare skills. As easy as it sounds to say attention to detail, so many people will miss a small attention to detail. So becoming the greatest human is talking to a lot of different humans. As a founder, you don't need to learn a lot of knowledge necessarily. You need to be a great human so you can attract other co-founders and other C-suites and other people in your company, and that is going to de-risk for an investor. When an investor hears an idea, great, that's a great idea. But do you have the team to execute on that idea? Do you have the CTO of Google? If you have the CTO of Google, investors are probably going to say yes, right? Can I put $1 billion in your company and get 10 million back? And so we have to go to unit economic projections month over month, so that we know how $1 billion turned into $10 million. And so we read that number. We already know the process. The high level focus, and that is the investment piece. You got that?
I think you lost you again. Yeah, I can hear you, and I think I lost you. I just have one or two couple of questions for you as the person you want to reach. I mean, the main reason with the webinar is to reach people like you, VC or business angels, to support entrepreneurs. So if you have one thing that, if there is not part of the approach of an entrepreneur to you, you will skip this person. What will be these things?
The one thing I want to see is that they can listen. I want to see that they can read the nonverbals, eye contact, body language, tone of voice, and microexpressions. If they're not listening, they're not going to attract or retain talent, and they're not going to grow. Listening is the number one thing I'm looking for. So when they pitch me, I want to see that they know how to listen. That's not for my attention. That's so that they can attract and retain talent.
Wonderful, wonderful. Another question was for me, but for other person. Can we send you our business model and you can review it and send us advice, or do you have any other way that we can have you support on order to reach other VC or business angels on your networking?
So anyone can reach out to me on LinkedIn. Anyone can reach out to me on LinkedIn, yes. As far as sending me a business model or a pitch deck or an idea, everybody wants to send that all day long, and my DMs are full with that. And that's the wrong way to approach it, because what I want and what every investor wants is a conversational pitch. I want to hear from you. If you want to send me a video or if you want to get on a chat, I want to hear from you and how you communicate your idea, so that I know how well you listen, so that I know how well you can interact, because that's going to affect you, attract you. You could have the best business model in the world. You could have the best product in the world, and it's still not investable until I know who the founder is. So I need to meet the founder. That's why don't send me the business model. Let's set up a Zoom and we can chat from there.
Wonderful, wonderful. Thank you so much being with us. Again, as Jeremy say, feel free to reach him on LinkedIn directly, and being active, being proactive, not being a zombie person sending things we don't see what exactly there. we want to see you as a founder. And I think for my side, to end in this webinar, I will jump up on I will bring all of you guys stay with us. Usman will stay with us. Or do you lay? Okay, I think it's only both of us. Yeah, he's right. I think our woman left because it's actually late on the country, because Saudi Arabia, I think it's late, and also Mauritius also, so that's why they late. They leave us. But I think from the experiences of this amazing webinar and having you parts of it and sharing your insight from the entrepreneur as myself, from the ecosystem builder, and also from an incubator, and from a VC. Actually, this was amazing to see the perspective of each person, seeing what is the important things for VC funding and what is the important step for each person, because the way, for example, Jeremy presents the perspective is different the way Usman or me can see the perspective, because we are from different perspective. My perspective as an entrepreneur, I want to support entrepreneurs go through incubator, go through an ecosystem builder, go through VC. So so Jeremy's perspective, he waiting for people to come to him. So, and for Usman also, I think it's kind of, so to end this conversation, I will jump up one question for all of you want to explore. Actually, a lot of entrepreneurs starting a business, and we know that most of 19% of them die before 1 or 2 years. What are the most reason put entrepreneur dying, startup dying before go to early stage or seed funding? What actually are the main blockers that all entrepreneurs come to, that they can't go through, that they can't put themselves? For my side, I have three things I can say. Firstly, the lack of ecosystem, because in Africa, as I said before, we don't have a ecosystem. Ecosystem is mean many things, because it's mean also the bank you have in your country. Some of banks are not reliable for investor to invest in your country. If you don't have a bank that have all the NFTA requirements, and also if you working on some kind of technology, if you don't have law on this technology on your country also, so it's very difficult and it's complicated. So this is first one. The second one is lack of financing, because most of entrepreneurs actually, when they're growing, they are very far from the accelerator and VC and business angels, because all this networking, as like we call it, a kind of knowing person, they knowing each other, and they don't only work with the person they know. So to be part of this amazing networking, it's very difficult from person coming from different countries in Africa, especially from the part of Africa that there is no incubator or accelerator or all those kind of steps. Because now we can talk about Kenya, Nigeria, Egypt. Maybe you can find what you want there. But if you go in all the other country, when you go to, let's say, some country like Somaliland, or when you go through Djibouti, when you go through Zambia, when you go through Burkina Faso, you have not this networking. So it's very complicated to raise funds. So the only solution for them is to raise for government funding. So they go through applying for many type of funding, because they expect the government supporting them to growing. So this is also a lack of financing. So they can't access to the financing, and the bank, they have a credit that you can't pay it. You have to pay it 1 year, and then you create a technology. You can't pay credit for 1 year. So in my country, in Comoros, if I go to loan in a bank account, actually I have to pay the next month. I take the credits, so I'm gonna pay the next month. So you have a complication of financial access and financial liability for you to grow and to scale. So the last things for me is, as I say, the product market fits. Many people, many entrepreneurs actually creating a business, because they see it's in side. I can take many examples, or take an example like in Comoros. I don't know, many people in different countries in Africa, many people try to replicate the Uber models, but it's not working because you know, when in Africa, I think you are only 5 countries you have Uber, because the model is not working in the same countries. So don't try to replicate a business you see that it's working outside, so you think they're gonna work in your country. Take your time seeing what's going on your side, what the real needs of your community. Don't try to build a platform, for example, from all the Africa country. Build something for your country, for your 1 million person, for your 1 million community person, and then you grow up, you scaling up with the clients. For me, startup is not about having money outside. Startup is about having clients. If you don't have clients, you can't have money. If you don't have customer who buying your stuff every day, you can have financing, so you can't grow. So many people think that I'm gonna create something and then I'm gonna reach to Jeremy, so Jeremy gonna financing my stuff, and I'm gonna grow and going to the high level of growing stage. It's not working that kind. You have to focus on building a product that fit on your markets, building a product that fit on your community, building a product you are sure that there is 1, 2, 3, 5 person come to buy your product, and they come back and they're gonna speak about your product outside, and then your product grow up. So that's how you build the net businesses. You can take the best example on the world rather than Amazon, Apple, all the example you want. They create something, people need it. They are sure that people are gonna buy the stuff, and when they buy it, they are sure that in behind, when investors come to invest their money, so they have return of investment, because people are using the money only you put inside the company to grow. But you don't use the money to doing marketing, to doing human resources, capital resources, because you need high talents on your team. They don't put back money. So don't do the mistake to think that the big company you are, the big money you come in the company. You can be true person and having a lot of money. You don't need a big corporate to raise funding. You need only customer. So this is the 3 things I think there is a lack of in my side. So maybe you guys, to end this webinar, you can show on your side, what do you think entrepreneur can have on the minds to be sure that they success on whatever they're doing? Yeah. Feel free to take the floor.
You want to go, Usman?
Yeah, I would say really solving a problem. I think coming back to that, solve a problem, focus on the problem, and then building a team, which is sort of a part of it. And I love what you were talking about, Jeremy, around the ability to listen and really building that team and attracting talent, but also attracting investors, attracting so many supporters, and then really be that person that can act as a champion. So yes, I that's my key takeaway actually from what you said, Jeremy. But yeah, I would say that's the first thing: solve a problem, and then listen.
Cool. Yeah, and for me, I think 2 major things for people to focus on is they think I failed and I'm not good. Usually when people fail, and I'm watching my internet, so I'm repeating myself, but when people fail, usually they think I failed, I suck, and so I'm going to stop. No, it's a failure of the iteration. So do the iteration again and again. If I can fail 10 times today, great. That means I get 10 learnings, and those 10 learnings are a stack of value. In life, you will lose money, you might lose love, you might lose a lot of different things, but your learnings from your failures, you will never lose, and your stack of learnings is your value. So fail often. If I can fail 10 times today, great. If I can fail 15 times today, better. When I get on my coaching calls with the CEOs, we are celebrating with champagne for failing. Fail often, be happy to fail, and communicate well. And communication means speaking out clearly, briefly, to an audience specific, and listening really, really well. Listening nonverbal is one of the most important things. Eye contact, body language, tone of voice, and micro expressions.
Thank you again, guys. I think we're about to go to 2 hours webinar. Wonderful. The first time we jumped through more than 1 hour. So it was really wonderful and very insightful. And I think one lesson we can learn from this webinar, that wherever you come from, wherever you're doing, networking is the most important thing for you as an entrepreneur. For everything you can build in your life, build your networking, build your assets, and go to the market and sell your stuff. So thank you again, and hope again for the entrepreneur, for the incubators working with us, you're gonna receive these records from your incubator, from AfriLabs incubators, that's working with AfriLabs incubators. So they're gonna receive this as part of the main program as incubation, in their own incubation. So every time we're doing entrepreneurs webinar, they receive it on the resources so they can review it. And also we're gonna send after 1 month the ebook. So you guys, I'm gonna send it to you. So maybe you can put your advice or your output inside it also once it's done. And thank you so much for being with us all of this time, with the loudly of ourselves telling you, go to the markets, take the business, and go through the founding. Don't hesitate. The only way you can success is being curious and learn from others and listening to people. Thank you so much again. If you have, and see you next time.
Thank you, Omar.
Thank you.
Thank you very much.